Yo everyone, this is my second YouTube video. Um, in today I'll be going over my weekly analysis, which is my first weekly analysis on this channel. Yeah, so I hope you like it. Any feedback, let me know and I'll continue to improve the videos. The reason why I started this channel is because honestly, there's too many fakes, and from somebody that's actually done it, I'm just trying to share all my knowledge for free. And yeah, let's get into it. All right, so we're going to start on Nasdaq first because we always want to start top down to bottom. And from the weekly time frame, we've been bearish ever since November, where we created this low, switching this bullish trend that was ongoing for a few months, since April, really. And why? And we've never exceeded this high time frame trend high that did ultimately create that low on the weekly time frame. So since then, we have been bearish on the highest time frame. Now you can switch to monthly. However, when it comes to futures, I don't really recommend it. So realistically, weekly is adequate enough. So ever since then, we did get a pullback right into this pivot point that ultimately did create this low, and then it immediately created a new low since then. So we're going to mark out our weekly expansion point where flow actually expanded from. The weekly flow expanded. So I marked that in here. Now, within here, it's important to mark out your major supply. Now, a major supply for me would be a switch where we see go from selling to buying and then selling again with a new low created, which is right here. So this becomes my weekly supply. Now I'm going to mark that out in green. Now I always mark up my charts out in green for the weekly levels. Now we have got a demand forming here. Now this is minor because it never exceeded and created a new high, and flow is bearish. So this becomes your major supply that created this last low, and now you're trading within this leg. So when it comes to your directional bias, you understand now that weekly is actually bearish. So you want to go to your daily and then H4, and then you can look for positions. So we know that weekly is bearish. Okay, now it gets a little bit more interesting. Let's actually correct that. Let's drag that over. So now daily is also bearish. Why? Because this was your last thing that did actually switch it back. So now you want to go over historically. Now we had a switch of flow here, daily break of flow. So it was bullish, and it was just retracing against this weekly we just highlighted previously. And as I said, it did come up into this pivot point, this area of interest, and then immediately rejected. So daily flow has been bearish ever since February. Now, this is not because this supply is what created this low here, and we never exceeded that, but we did exceed this bottom, and this is where it expanded from here. Now it expanded again and again, expanded, and now this becomes your last most recent leg of directional bearish control, because this is what created this last low. So now you're trading within this leg. So now that's also bearish. And now going on to my area of interest, and as you can see, it actually has hit my area of interest. So I'm going to mark out my daily supply, and I always do that in red as well. Now this is where we can start to look for entries. You always make sure you want to engulf the wick to the body of the candle. And you would obviously clone that, and then you'd double stack it, because this is also your demand, daily demand. I'm actually going to move these back to be extended. All right, so now we know that the weekly is bearish, and so is the daily, and it's actually come into this expansion point that did provide we got a little bit of so this is a pivot point because it did actually break this. This becomes a structural lower high. So I'm going to mark that out because that is relevant. All that means is that there was engineering from an institutional perspective to be able to create this, because this is what created the last low, and then it switched it. Liquidity swept it, and then it also created a new low. So this is just engineering. Break and then transition. So that becomes an important point. I'm going to just do that, and I'm going to change it. All right. So it actually has come into my zone that I am looking to short from. So I'm going to mark that in purple. Purple is just the area. Now, as you can see, it actually has tapped my area of interest. Area of interest, again, is where I look to short from or buy from, depending on the context. And we want to always position ourselves within the trend. So the trend is on bearish on the weekly and daily from this point and weekly from this point, and it's come back up to mitigate that. And now you're seeing a secondary rejection. And obviously you would look for an internal pullback within here. We'll go more in depth to ride it back into the lows. And this is a high probability trade, an A grade setup, because you're trading with the trend, with the flow, with the controlled market, which is obviously right now is short. So we're going to go on to the 4 hour. Okay. So I actually did take this short from here and I was looking to reposition in here. Unfortunately, I wasn't at my desk but that's just an unfortunate thing. I should have really took that. So we can refine it, and obviously I'd refine it to around here. So we're going to extend this right here. I'm actually going to extend this one here as well and pull that back. Alright, cool. So we had a 4 hour break of flow here. And what that tells me is that we are getting a pullback relative to this daily leg now. So when this initiated, I did look to buy here and I actually bought here, I believe. I'll go down into it. I'll break that down in another video. But yeah, obviously, so once you got this 4 hour break, we're going to be pulling back against the daily now. So you can look to buy into the daily leg, or you can wait for the A grade setup, which will be right here. So then you short it back within the directional trend of the market. And as you can see, it immediately rejects. This shit is so easy and everybody overcomplicates it. And I've just got to the point where I'm just doing it for weeks and weeks and weeks now. And honestly, you can go and back test this for yourself and you will just see the accuracy of it. I'm not trying to sell you anything like that. This is honestly the way that I read the market. And this is what I've done for years now. I never sold a course, nothing like that. I just think it's about time with the industry, the state of the industry now is we start to put in some, we need some profitable traders in here. This market's disgusting. Anyway, so obviously H4 is bullish right now. And obviously it'd be bullish until like here. So again, you would be looking for the H1 now. So I'd go to the H1. So H4 is bullish. Okay. But we did get a H1 break of flow here. And what that means is now the H1 is in line with the daily and the weekly, and we're pulling back against this H4 leg. So honestly, I would be looking right now, if we get it though, a pullback into here or here. Now there is news coming out, so you can hope. Now again, if you did get in this short, unfortunately I didn't, but I did ride this buy into New York Open. I'll be breaking it down into here, actually, into this daily leg. I bought into the internal leg of the short. So anyway, so now you'll be looking for a pullback right into here or here, or you might even just get an immediate one because this is now your new H1 supply. Yeah. So you might just get an immediate tap back into something like this. And then it shorts again into here or here, which is your expansion point right here and your pivot point right there. Now you got to be careful. Now, if you did take these shorts, you'd be looking to see how price reacts within the expansion point here or the pivot point, because we know that this is where price can reverse and provide a pullback like up to here. And now you'll be in a range. So yeah, but honestly, this was a golden short. One of the best shorts, honestly. It ended up happening around like 1. I wasn't up for that. So unfortunately I missed it. I should have set a sell order, but again, it doesn't matter. Patience always pays and there's always an opportunity. I'm already up 2 trades this week. So, you know what I mean? This shit is so easy. So I'm going to mark out my expansion point here. And this is just a liquidity point. So this is where price can come into, and you want to monitor how price reacts within this zone. And obviously right down here, I'll name that purple as well. So honestly, what this means is that we're shorting right now, and you obviously want to look to short within this leg currently. I'll mark it out right here. So you're looking to short within this leg here. Now, if price hits here, okay, you do want to be a little bit careful because H4 is still bullish. So you need to see a transition within here, here, here. And I'm going to bet we might see something like this. It comes into this zone and then it pulls back into here, here, or it goes higher. Again, your job is not to predict every move. Your job is to adapt and understand that what each point means and where you want to be positioned in your trade based on the context that I've just provided. Okay, so that's really easy. I'm going to set an alert here into New York Open, which is currently in a couple hours. And I'll look to ride it potentially down into here if we get a continued immediate short into here, or here if we are lucky. So let me just go over it one more time. Weekly is bearish, okay? So weekly is bearish, so you're trading with the high time frame trend. Now daily is also bearish. We see a lower high created because it had a break, which created this low, and then it immediately provided a liquidity sweep, an overshoot, which is basically just a little tap. So it's just engineering, institutional engineering at play. And it provided a new low, so you're trading within this leg, okay? Now, once you got this 4-hour break of flow, the 4 hour was retracing against the daily. So you could have looked for buys within this. Just know that this would have been your point where we can look to see or anticipate that sellers are going to re-engage from this price point. And as you can see, it literally does that, and it does this all the time. So what I'm putting you onto now, I've gate kept it for years, and I'm going to finally put everyone onto it. So again, you just be looking for a short within here, or if it comes into here, I wouldn't look to buy it, honestly. So I will just be waiting to see what I get in here. I need to see a 1 hour break of flow. So if I was to even engage in something like this, I'll be counter trend. So that means that the quality of the trade downgrades significantly. So you need to see something like this. 1 hour break of flow, like here, and then it breaks, and then you look to trick it on here, back up into something like here. And then you can obviously look to short again. Just completely adaptive, understanding what the market means, what the price means, what to look for, why to look for. And this is honestly how you become consistent, and you can look to swing positions to weeks to months ahead of time. So just for trade recap. Okay, so I'm going to go to the M15 now, and this is where you got your expansion right here. I'm just going to do, it'll be like intraday expansion. Oh. Alright, so this is your expansion point here, which will be your first zone if you get an immediate pullback into New York Open. But again, there is a lot of news today, so I'd be cautious. And you could look for something like this. This is what I would be looking for, honestly. Like that. If it provides it anyway. Honestly, you'd rather wait for something like here, but depending on the news, you could see it. So that's pretty far up. So I'm guessing you might get an immediate pullback back into here or something up here, and you ride it into this zone that I highlighted on the high time frame. Now let's go down to the M5. Nothing unmitigated here. There is a little unmitigated block here, so I would mark it out. This is just continued flow. This is just the excess that's provided, so it can either hit here or here. Anything above here, I would not take nothing. You'd need to see a entry, and I've gone over it in detail, my entry criteria on the previous video. So if you want to check that out, you can. And essentially what I'd be looking for price to pull back within here. I want to see a break, depending on if we have participation, which is the volume, or I would look for a retest back into here, and then I would position on a lower time frame like M1 break within here, and then I'd ride it down into these lows. That's just literally how simple it can be. I'm a bit OCD when it comes to my charts, so let me just make sure that this is looking good. Ew. Let's sort this out. Alright, so that's how easy it is, okay? Let's go on to US500, my favorite pair. Now, again, you must know that US500 and Nasdaq are highly, extremely correlated. So honestly, the way that I use both of them is sometimes that my weekly analysis is the same, my same bias and that, but sometimes they give you one of the other will give you a better entry. So that's what I look to capitalize on. Now, again, starting with your weekly, never start with anything less. You always want to start on your high time frame, get the higher time frame directional bias. So again, we have been bearish ever since here on a weekly time frame, weekly break of flow. Now this becomes my third retest pull. So now this is my supply, major supply, and we've not had a pullback yet relative to this leg. So we're going to mark that out here. We got a minor. I'm going to pull that back. We've got a little minor demand forming here. Now, honestly, from a weekly time frame, we can pull back right into the around 6,000 range. If this continues, then this is looking really probable. I'm going to mark that out here. And it could honestly ride back down into here. And this is where you would go into the monthly. And this is honestly, I think personally, we're just getting a pullback on something like here. And then it would obviously skyrocket like that. It's just, price is the same premise on each time frame. It's just that on the higher time frame, it takes longer to form. So this time frame correlation, honestly, the biggest skill you can learn. So weekly, so we're trading within this leg here. This is your dominant bearish leg. And we've had multiple expansions, one here, one up here. I'm not going to mark it out. And we're something within here. That doesn't really have any relevance. I'd say this is because this is actually where price expanded from, weekly expansion point from here. So this becomes a very high priority zone and an institutional zone that I would look to target because it's been validated with participation, volume, an intent to switch and extend the trend on a higher time frame. Obviously, the higher the time frame, more orders. So yeah, when it's come back in here, we're going to see a major rejection or a extension depending on what happens in the near distant future. Look how clean price has been. Honestly, this week, these few months have just been so easy. Yeah, so on the daily time frame, I'm going to do, okay, so that is my weekly lower high. Why? Because again, let me mark it out. So this was your supply that actually created this low and expanded a previous weekly demand level. Okay. But then price comes back up. It liquidates that immediate supply, comes back and mitigates the true supply up here. So that's just liquidity engineering, which validates my higher low, lower high structure. I don't really put too much premise into the structure. I'm more flow based, but structure just tells me that, you know, there was more orders. There was an intent there. There was a huge decision made there. So then it becomes more valid when it comes to the high time frames. And this is something that I would it essentially increases my zone, increases my area of interest of looking to short or buy from. And I'm going to mark out my daily, my area of interest, which is kind of mitigated here. I'm going to mark out my lower high right here. Change that. Supply obviously would just be here. And we'll be looking straight here. And it's already mitigated this. This is obviously your point that this expansion point here, my area of interest, my purple zone, created this low here. Price has come back right up, probably into a refined point on a lower time frame, and it's immediate rejecting. And I wouldn't be surprised we see something come back into this low for sure, and or an extension back down into something like this. So easy, mechanical, methodical, and process driven. And honestly, this is the only way that I think is completely valid. And nobody is teaching it like this. Literally nobody. It's so overcomplicated with little lines in there. They don't understand where to take profit, why to take profit, what supply means, what demand means, how do you validate that? And that's exactly what I do. Been doing this for years now. Okay, so it's come back up to this area of interest. Probably a lower time frame here, but let's just focus on the H4. So we had a 4-hour break of flow, just like we had on Nasdaq. So ever since then, this H4 time frame has been pulling back against this daily leg right here. So as price comes back into my area of interest, I'm going to be dropping a video of how I actually find my area of interest for free, by the way. And I mean, nobody does it like that because they're all teaching the same ICT, which basically, if you've been around for years, you just know that ICT is a complete bum and been exposed multiple times. And IVFG, like in fair value gap, like, come on, bro. Like, are you taking this seriously or are you just trying to look cool? Like, this ain't science. You know what I mean? Just, yeah, the industry is a state. Anyway, so obviously 4-hour is definitely bullish. We're just in a retracement against this daily leg highlight right here. I'll put a line here for your visual sake. And obviously expansion point here got liquidated. So now we come back up to essentially the pivot post mitigation extended into this flow. So for our bearish, we have to go to the 4-hour is bullish. So now this is where it gets interesting. So I did actually take a buy on US500, not Nasdaq right here so easily. And I actually got out here. I'm going to break out again, like I said. And yeah, that was just pretty easy. So ever since here, we've had a H1 break of flow. So that basically tells us that since here, we are now in a retracement against this 4-hour, but we're now in pro trends for daily and weekly. This becomes a very nice point to sell from. All right here. So I'm going to mark out my 1 hour. And basically what it 1 hour is telling me is that if this breaks here, we're getting a pullback relative to this leg here. So this is where you can look to reposition into shorts right up here like that, or up here, even better, just like Nasdaq. And or so finishing it off, let's just mark out my, actually I'm gonna go back to my 4 hour. Yeah, 1 hour. And we'll mark out this as well. It's your pivot point. Anyway, so there's that. I'm going to mark out my 1 hour supply. And I'm going to mark out here. I'm going to pull this back. It's been mitigated now. Make sure it's not like that. Just going to name it 4 hour supply. Not major though, just minor. Let's actually, and then that's it. And then knowing that there's an expansion within here. So this is your immediate leg that you can look to trade. Or if you get this break, then you're getting a pullback relative to this leg here. So yeah. Let's refine this block. And this is honestly how you get like sniper entries, because usually it comes back into the refine point. So like instead of having like a massive stop, like you enter here or here, like what I go over in my entries is that you would actually wait for something like this, take it like that, and then stop will speed above here. Same thing for that. Easy, easy, easy. And then within this H1 leg, your immediate flow for New York, it would be something like that. Let's go to the M5. And just like the same, you got something like here. So you'd have to wait for the M5 to break, which is telling you you're going to get a pull. Actually, I'd say M15. Not even M15, M5. I'd say you have to wait for something like that. Break above this, which is your low time frame M5 supply. Yeah. And then if you get something back into here, you can look to short from here into this like here. Now, if it really mitigates this, then you have to see what happens from there, honestly. But the immediate is I'm looking for shorts only for now until we get back into something like here or something like down here. Now, I'm definitely bearish, so shorts for me, I mean, buy longs for me would have to wait until I get a H4 break of flow. So I'll be riding with the H4, and then the H1 is also bullish, and then I'll be riding it back into the daily, which I've got highlighted above. Other than that, I'm still short. I'm going to only be looking for shorts that I can position and trade it intra-week, intra-month, swing it down, because obviously from a higher time frame, weekly and monthly, we can clearly see a proper liquidity point that we can look to target and ride all the way down. So that's it. If you enjoyed this, please subscribe. I'm going to be dropping a lot more source. But yeah, thank you.